You're not in the industry. You don't sell this for a living.
I walked into this meeting pretty skeptical. I found really bad sources online. Don't smoke, don't drink, and don't buy permanent life insurance. This is kind of where the conversation of whole life insurance goes off the rails.
Are you familiar with the volatility buffer concept of life insurance and retirement?
100%. I've actually read Wade Pfau and his work that he's done.
You've read more than most people in our space. Congrats. You deserve a trophy for that. Why life insurance versus high yield savings account?
You can't just funnel all of your money into these assets that go up and down all the time. You need to have that base that you can live your life on.
You envision using your policy to invest in other deals or businesses?
Absolutely. I'm not risk adverse. I do take very targeted high risk plays. I'm able to do that because I have this safety net. It was also super simple to access, wire the money out in a couple hours. It was in my bank account.
Hey guys, I got Chris from Cleveland on the line with me, and what's really cool, there's a first for everything, and this is just a shout out to anyone that's commenting on YouTube. If you want to be on the show and just talk to me, I'm available. Chris, you commented 2 weeks ago on a video that I did reacting to the Money Guy show talking about infinite banking, and what really hit me with your comment is you're not in the industry, you don't sell this for a living. You are an entrepreneur, and we'll get into what you do in a second. But you were very, very thoughtful in your comment. And I was like, man, this guy knows quite a bit. I bet this guy practices. And so I just responded back and said, hey, if you want to come on the show and talk, I would love to, have a conversation. I think everyone benefits when we can have talks and conversations. And you actually followed up. I've reached out to a couple people, and you were the first person to say, yeah, I'm in. And with that, you're here. So you have zero expectations. I have zero expectations. But I do
Correct.
believe that the more conversations we can have, the better. And I'm here to answer any questions, but I'm mainly here to hear your experience through what some people call infinite banking, whole life insurance. And with that, if you just want to give a little bit of introduction to who you are, and we can jump in.
Yeah, no, thanks, Caleb. And yeah, it's fun to be here. Like you said, I kind of came into this with zero expectations as well. But I thought it'd be fun because I have had fun with this topic. I've always had a lifelong interest in personal finance. And I've kind of taken a bit of a circular journey with that. But yeah, the comment that we're talking about, I know, I've always just been fascinated on whole life insurance, specifically because, I think you guys have a hard time selling the product, I think, in certain situations. And I think, sometimes there's certain agents that maybe aren't educated themselves on how these policies work. And I think other times you're trying to explain things to a consumer in a way that they can identify with or understand.
I'm excited to hear just your journey about how you got introduced to whole life insurance. By the way, the people watching this will appreciate you, but majority of YouTube thinks you're a weirdo. You find interest in this, but I can appreciate it. I think people that watch this channel will appreciate the journey that you've gone on. Real quick, how long, what do you do for business? And then how long have you been, doing some type of life insurance for your own self?
So what I do for a living, I actually own a manufacturer's rep business. So we sell industrial plastics into a number of different industries and applications. But yeah, so as far as my journey with life insurance, whole life insurance, when I was growing up, like I said, I've always had a deep interest in personal finance, and I kind of came from that sort of invest first mindset. Funnel as much money into your investments, funnel as much money as you can into your 401k, IRAs. Set up that 3 to 6 month emergency fund. And, as I got into adulthood and, started seeing the list of things that you need to finance throughout your life, whether, it's your first car, whether it's your kid's college, whether, it's your house down payment, whether, all these things, come up. How do you safely and securely with control set up your financial life so that you can, finance those things without, taking on risk, without, having to, get yourself too risk heavy and be able to live your life with more control. So I started, really accumulating a lot of cash once I started owning a business, because I already had a lot of risk on my plate from owning a business. And I was put in touch with a life insurance agent through my business coach. And, when I was growing up, with that sort of investor first, mindset, there was basically, a couple, rules, don't smoke, don't drink, and don't buy permanent life insurance,
Same. Yeah. Yeah.
It was,
Yep.
it was basically, so I walked into this meeting pretty skeptical that, I'm just being sold,
Yep.
I'm whatever they say, I'm paying for somebody's Ferrari and,
Yep.
all that kind of stuff. And I, luckily my agent, was very transparent and very, knowledgeable on the topic. And, I wanted to be open to the concept that maybe there was something I was missing here. Right. So, I was shown a few different policy designs and, went, and then immediately kind of went online and dove, straight into the topic, because, I'm not the type of person that's going to put in all this capital into a product without really understanding the nuts and bolts of how it works. So, I found your podcast, and I found, a number of other, I think great sources, a number of really bad sources online. I read Nelson Nash and, did kind of took that whole journey and kind of took everything in, and then, dove right in. So this was actually beginning, it wasn't too long ago. It was about beginning of 2021 that I started my policies, and I've added a couple policies to it since then. And it's done all the things that I expected and more.
What was the initial epiphany that you had when you were, because I bet you came in with very skeptical, but you had the meeting for a reason. What did your business coach say for that? And then what was the reason that you were willing to do research? Because again, I grew up actually listening to Dave Ramsey, and I had this perception of life insurance as a terrible place. And so I feel like I went on this extra long journey, because not only was it, am I going to buy some, but I'm actually going to represent and be a part of the quote unquote problem. It was like an extra burden that I had to really get through. And so what for you, why did you have the meeting in the first place? And what did the initial reasons why you wanted to go deeper to discover if life insurance is pro or con for you?
Yeah. So, when I acquired my business, I wanted to first get some different perspectives on my financial picture. I'd always been, pretty well educated on finances in general, but I kind of felt like, it was time that maybe I just got some, just some different perspectives on the topic. Primarily I was interested in tax savings. I was interested in having, as my income was rising, that was something I was definitely concerned about and wanted to, maybe get a different perspective on. But I think the epiphany, came, around that whole idea. And I think this is kind of where the conversation of whole life insurance goes off the rails, because whenever I see these discussions going on online, it's never usually about whole life insurance, or at least I don't think that's what the core thing is about. It's about having cash, or having a cash-like instrument. And that's where I think, whether it's, Dave Ramsey or everything, it's the amount of cash and safe capital that people have is really where this debate is, and yeah, I mean, whole life insurance is not going to get you investment-like returns. It's not going to, make you wealthy. But I have found that having a large cash position, much larger than the 3 to 6 months that, is typically talked about, makes me a much better investor. And I'm not risk adverse. I mean, I own a business. Another hobby of mine is cryptocurrency. I do take very, targeted, high risk plays, but I feel I'm able to do that because I have this safety net.
Yep. Are you familiar with the volatility buffer concept of life insurance and retirement?
100%. Yeah. I've actually read Wade Pfau and his work that he's done. He's actually a really great a great expert on that topic.
You've actually read Wade Fowles' book cover to cover?
Not cover to cover, but I've read some of his essays.
It's amazing.
Yeah.
You've read more than most people in our space. Congrats. Like, you should deserve a trophy for that. But so volatility buffer, hear me out. Volatility buffer, for those watching, are saying, like, you could actually look at life insurance as like a bond alternative, and a portion of your portfolio in the future could be in life insurance. And what that could do is, if and when there's volatility in your portfolio, you could let your portfolio recover instead of taking money out and, tap into your life insurance policy. And as a result, giving 4 to 5 years of volatility buffer just increases your ability to take out more in retirement without your chance of loss or losing all your money. And so that's the layman's term of what a volatility buffer is. As a business owner, I believe every single business owner should have their own volatility buffer. And you're actually doing it as well. As you're taking risk, and if we looked at your whole financial system, I bet your business is the greatest source of cash flow, period.
Oh, for sure.
So your business is creating a ton of cash flow. You have probably other things that are creating cash flow. And life insurance is like that foundation that not only is it a portion of it going to be amazing for the future and give you options, but you're essentially taking a part of your future retirement portfolio and creating volatility in your current cash flow, but also financing other investments. That's exactly what I do. I own multiple businesses, and if you looked on my quote unquote portfolio, I have safe money, which is life insurance and cash and savings. And then I have lots of other investments that would say are risky. They're not as risky because I have experience, I have relationships and all, but I would only be able to make certain moves because I have years of reserve over here, but also the years worth of reserve are also financing other opportunities. And so what you're doing and I'm doing are actually very similar, and you're using the volatility buffer while you're in business, and you're actually able to get greater returns and make greater moves because you have that in your life.
Absolutely. And I actually haven't even taken out a policy loan yet. And I knew going in that, I wasn't setting up my policy so I could, get, immediately, pay my premium and then get the 90% out and, go invest in real estate or that kind. That wasn't a goal of mine. I understand it's a goal of some people's. It wasn't of mine. The way I've kind of tried to set up my policies is, I want to, and just kind of like we're talking about that volatility buffer, I want to be in risk assets. I want to grow my money over the time, but I also want to have a substantial cash position, maybe, 20, 30% of my overall portfolio. And that as I go up, hopefully that goes up as I near retirement. So I very much treat my policies just like you're describing as kind of that long-term bond exposure in a tax-free shell that I feel I need as part of my portfolio.
It's amazing. It's amazing. What when you do take a policy loan, are you going to do a third party like bank and collateralize it, or are you going to go right to the insurance company, or have you not decided yet?
Well, it's funny. So while I haven't taken out a direct policy loan, so I was in the midst of building a house last year, right? And obviously kind of a cash flow intensive endeavor. Yeah. And there was a couple of months where I needed to kind of supplement the cash flow. So even though I didn't take a policy loan, I did leverage it in the sense that I also had my brokerage account that I actually had at the time a very low margin rate on. So, and it was also super simple to access. It was basically I could just get wire the money out in a couple hours, and it was in my bank account. So kind of the combination of the little bit of a lower rate, but more of just the easiness. I'm kind of a lazy guy when it comes to that. If something's a little easier to do in the short term, I'll run and do it. So I took out a margin loan to kind of cover that cash, and I could have and people can do any number of things. You can take a signature loan, you can do whatever you want, whatever is easier or whatever gives you the best rate, whatever is the most value to you in that moment. And then I paid it back. But would I have felt comfortable taking a margin loan if I didn't have that pile of cash value also sitting there that I could? So it just gives you optionality, and and freedom to kind of run your financial scheme the way you want to.
Yeah, another way to say it is you may have not taken a direct loan from your insurance company based off your cash value, but your cash value allowed you to tap into other areas of maybe you got a better rate, better result, and that was only made possible because you had cash. Now,
Right.
I want to go to the next maybe obvious question is why life insurance versus high yield savings account? Because right now a high yield savings account pays more than your internal rate of return in your policy right now. Obviously, that's a short term, but there's a lot of people that are like, Caleb, I get it. Why can't I have hundreds of thousands of dollars in a high yield savings account? But you can, by the way. I'm not saying you can't, but why did you choose whole life insurance for the long term versus a high yield savings account that could potentially get you a better interest rate in the short term? I think we all agree long term, whole life insurance, when set up properly, will outperform. But in the short term, in the first couple of years, you actually have more money in a savings account than you would in your cash value.
Yeah. No, and I think, and for some people, maybe a high yield savings account is, the best option they have. Maybe they're, uninsurable for whatever reason. Maybe, it just makes no sense for them. Why it made sense for me was, I think, a few things. So yeah, I mean, once I kind of established that I needed that cash, then you kind of, that's when you pull out your calculator and you start, kind of figuring out, what's the most efficient, way to accomplish that goal. Right. So there was a few things. So one was for me, the tax advantage nature of cash value, and that it, once if you're putting money into a high yield savings account at 5%, that's throwing off a lot of very high taxable marginal interest on that money. So that wasn't something that I was too keen on. But I think the other reason, this is something that I didn't really realize going into this discussion on life insurance, but when I walked into that first meeting with my agent, I had a little bit of life insurance. I had, my wife and I, we each had, maybe, $1 million policy or whatever. And I didn't really think about it all that much. I didn't really think about, mortality or death. Well, what I've found is that, kind of going on this road of life insurance has almost been, not to sound kind of cheesy, but it's almost been a little bit of a spiritual journey too. Just, putting myself in a place, of, what's important to me now and what's going to be important to me in another, 10, 20, 30 years. And so the idea of not only being able to save money in a tax advantaged way, but then seeing that, if I put $1 in, that's creating 3, 4, 5 times the amount in death benefit that could then go to my wife or my children. That's kind of the dopamine hit that I felt like I needed to really make the program successful. If it was just a place to store cash, I mean, that's all well and good. That's I think for a lot of people, it's marginally better. But, I do sort of worry. And, when I see online that people just are concerned about, setting up these policies for super high cash value and they get so tunnel visioned on that cash value accumulation column. I did, for the few weeks when I first started researching it, I got so, myopic on that cash value part. And, I don't know if those people are going to have the long-term vision necessarily that I think this product needs and requires. So
I don't have the book to show, but I'm reading a book right now on Marcus Aurelius and his journal entries. And he's been dead for thousands of years. And it's amazing to me how he talks. He's known as like one of the Stoic writers. And he talks about death all the time, but not in a way of like being depressing, but almost being like it's one of the most enlightening things when you know that you're going to die. We are all going to die. And so when you know that, it's just like, why do we worry? Why do we have anxiety? Why do we care what people on YouTube think of us? Why? But then also it's the ultimate filter of what we should be really focused on. One of the things that I'm hoping to create a movement around is people being the main speaker at their funeral, whether you want to call it a video eulogy or written eulogy. But I just find that if people did that while they're alive, they will be more intentional. Humans, parents, spouses, leaders, they'll maybe be willing to make bigger moves while they're alive.
Yeah.
And because they did an activity that thinks with the end in mind. And the same thing goes with life insurance. Is like, there at the end of the day, we could make an argument that if we strip the death benefit away and you just look at all the other benefits that you get while you're alive, you could make the argument that this is better than a high yield savings account. I think you could make
For
that
sure.
argument.
Yep.
But I just don't even think we even need to go there if you have an appreciation of, I am making a decision today that is, in many cases, way more than 5xing, 100xing in the beginning, 1,000xing in the beginning.
Oh yeah.
And
exactly.
at the end of your life, if you die at life expectancy, it's a 5, maybe an 8 to 10, 12x of what you put in throughout your life. And it's all going to be passed on in addition. Like that for me is pretty incredible. And I really appreciate you mentioned that, because we are a lot of times not focused on that, because that's not what sells. But I want to have more conversations around that, because at the end of the day, you're doing the right thing. But I believe you're going to show it more powerfully in your family and in your business by having thinking in the end in mind versus not thinking in the end in mind. Like, I think that there's just a energy difference to the person who has got that figured out versus the person that doesn't really want to think about it. There's a quote that's, circulating around the life insurance space. I think I heard it from Todd Langford, and he just said there's no deals in the insurance space. So everything has pros and cons. You can't be saying one thing is the best across the board, because you're giving up something else. Now, if you care about cash value more than death benefit, then yeah, you can have a paradigm and there's certain designs. But then there's an art to, like, hey, I care about cash value, but I also care about death benefit. How do we create a policy where, in 10, 15, 20, 30 years, there isn't that drop off, because we're integrating, we have enough base for the policy to continue to kick off. And for those of you that are curious even what we're talking about, we have plenty of videos on our channel about different designs. I'm going to have a series coming out that talks about different companies and policy designs, pros and cons. And even in the first video that we did, we played devil's advocate of why someone might want a not as optimal design and some of the reasons for that. What percentage of your savings / investments go towards your life insurance initially? I don't assume that it all stays there. But like right now, at the time of this recording, the percentage of what you invest long term, what percentage of that is going to the life insurance portion of your portfolio?
Yeah. So, right now, probably a majority of my cash flow is going into my free cash flow is going into my life insurance policy. So, and I'm doing all things, I'm not one of those people that, one of those, infinite bankers that like hates, qualified plans and stuff. I think there's a place for, everything. So, I still do fund my qualified plans. I think that's important. I still, invest in a brokerage account. I'm not anti-stock market, obviously.
Yeah.
So, right now I'm probably hovering around that, 70% of my free cash flow going into my policy.
And your goal is, though, to use that as some people would call bank, but use that as the way that I explain is you have your emergency fund, and then anything up above that is some type like an opportunity or kind of like a investment fund. How much do you envision using your policy to invest in other deals or businesses?
Absolutely. So 100%. So, I mean, that is why I am, shoveling that, kind of, amount of money into those policies is, I am setting myself up to, potentially, make other business investments, make other, opportunistic investments. One of the things I feel, and, people might disagree with me, is that, we've for the last 15 years, we've been on one of the most, mega bull cycles that, obviously the pandemic, was a little bit of a faltering point, but, regardless, there's going to be an opportunity whenever it is. I don't know when it'll happen, if it's next year, this year, or 5 years from now. And I want to be prepared to, with cash that I can access those opportunities.
Same. I think I remember exactly the moment COVID hit hard market dropped, you know that it's like this is an emotional experience. And I had lots of friends that, put money in because they're like betting on America not going away, and they made good money, but they're only able to do that because they had liquidity. And that's an example of, there's hundreds of examples I could give of people having access to money and they able to get a better option than someone off the street because they just had money at the right time and had the right connections or opportunity. And so the Money Guy show, I know that you've watched some of their stuff, and they're great people. I'm a big fan of how they articulate. They have an amazing following on YouTube. This is obviously when you commented. I don't know if you've commented on any of our other videos, but you caught my attention on this comment. What was your thoughts on, number one, their show, but number two, their explanation of infinite banking? Because they have a ton of respect in the industry.
Yeah.
What were your initial thoughts when you heard their video?
Yeah. Well, it was interesting. I do like the Money Guys. I think they definitely get a lot right. And, Dave Ramsey too. I mean, I think his style is a little bit, abrasive sometimes, but, I think they get more, they get more right than they get wrong for the most part. When I saw the video come up on infinite banking, I was interested in their perspective on it. I think I forget which one of them. I think one of them actually used to be a life insurance agent at some point. I think he said that on some of the shows. So I was kind of interested in how they were going to take that topic on, because they'd always been, very much of the typical, sort of personal finance, advice of, stay away. So I thought overall they did a better job on it than most of the time that you'll see, traditional financial experts take it on. I thought that, they laid out the parts of the policy correctly for the most part, as far as, that you want to have a policy set up with additional premiums, you want to overfund it. They weren't trying to, basically make this argument against, a full base policy that you often see, Dave Ramsey do and all that kind of stuff. They were setting up the argument in a little bit more of a honest way, I thought. But they still fell victim to the whole thing of comparing it against investment. So, as soon as they started talking about it, they pulled out their calculators. And if you're talking about this stuff and the first thing you do is reach for your calculator, you're already going down the wrong path.
If you compare it to an investment and you show me a chart of person A versus person B, and person A put their money into whole life insurance and did nothing with it, that has an internal rate of return of 2.5%, and you compare it to an 8% investment, like, I'm okay. Like, I get it. Like, do we want to have a conversation about, like, some maybe different perspectives? Or, because I agree with the math and I agree with your perspective of that. So I always, like, I can write these scripts when I know the talking points. And that's why I can't wait to have conversations, because you don't have to agree with me that this is a right or wrong strategy, but it would be amazing to share our perspective and at least gain empathy, because I have tons of empathy for why you wouldn't want to do this. Like, tons. I 100% understand why someone does the FIRE movement. I might not agree with it 100%, but I totally get it. And I understand why someone would do X or Y and Z. And I understand why someone wouldn't want to do this. And it's not like we're right, they're wrong. But I feel like I've taken the time to, like, really seek first and be like, I understand why someone would put money in a 401k. And I might not want to put all my money in a qualified plan or defer my money to an unknown time at an unknown threshold, whatnot. But I understand why someone would, and I'll also understand why someone would do it, and they would be right based on their scenario. So I think empathy would be, like, my goal. It's not to try to convince and change their mind. It's just create maybe a better scenario so that they actually understand, like, people doing this are not out of their mind. They may be valuing things, like you're saying, maybe higher than they value, but it's not like you're insane, I'm insane. It's you value maybe things a little bit different, and because of that, that's why this makes sense.
Well, I think a perfect example of that is, Dave Ramsey, the way that he has his baby step structured is, before, after doing matches and 401ks and all that kind of stuff, he wants you to pay off your house, before you start investing. And, a lot of people look at that and say that's insane. Why would you pay off a 3%, mortgage when your investments could be, making 8 and 10%? It's just bad math. And this is actually, I mean, I disagree with a lot of what Dave Ramsey says, but I get what he's getting at there.
Yep.
What he's getting at is that people value safety and security, and that, people with a paid off house, for a lot of people that provides that safety and security that they can then go and be more successful investors and live a happier, more fulfilling life. So I do, like you say, empathy is a great word. I empathize with that. I think, where Dave Ramsey is, gets off the rails is, that's you can accomplish that in other more efficient ways that gives you control. And you don't have to go to a bank to get your money, out of a fully paid off house. So, but
yeah, what would happen if Dave Ramsey endorsed max funded whole life insurance, 30-year mortgage, using a reverse mortgage to maximize income in retirement, knowing that your death benefit is covering the home ultimately, like it's you're creating more cash flow in the future because you have permanent life insurance. Like that would be like the day that happens is going to be a scary day. Like I'm going to be worried about his sanity. But like that's what's funny is like, yes, I 100% agree with what you're saying. Is like I have empathy on all of what he's saying, but is when you actually reverse engineer even what he talks about debt. It's like, what is debt? Cash is a form of debt. And so I get what he's saying, the feeling of security, which is valid. Feeling right. Like if you feel a certain way, like that's valid. I'm not going to try to convince you to feel differently, but just because you feel that way doesn't mean that's the right. Meaning like a paid off house might not be the most safe thing, but I'm not going to try to convince you otherwise. But that's what we're trying to do, is just create a different perspective so that people are open-minded, can still get those feelings, but might have a better, more efficient way to accomplish that.
Well, that's what, I mean, my first house, I got a 15-year mortgage and I paid it off in 8 years. And, I made that final payment and it felt great for, like a week. Yeah. And then I started, realizing that like, wow, I've got, all this money locked up in this house that I then have to, go ask a bank permission to get access at. And, and that's kind of, what I just see, with just the typical financial advice is that, people have to live their lives. You can't just funnel all of your money into these assets that go up and down all the time. You need to have that base, that you can live your life on.
Yep. Chris, this has been a super enjoyable conversation. Thank you so much for coming on. Is there anything else that you want to leave this conversation with? Anything that you want to say?
Oh gosh, no. I think I really appreciate Caleb. Yeah, no. Like I said, I think I think we touched on all the the main topics that I'm passionate about. It was great getting to know you a little bit better. Maybe hopefully we can have another conversation sometime. It was fun.
Anytime you want to come on and jam, please let me know. And then if there's anything that we can do for you, your family, your community, your business, love how you're thinking. We need more people that are not in the space to have conversations like this. And for every time I get a comment that says the only people that ever talk about this are people that know,
send them my way.
I'll send them this video. Like I'm not gonna send them your cell phone number, but I'll send them this video. And but they're actually not wrong. It's true. If you look at a lot of people talking about it are people that get paid. And so when I look at that comment, instead of me like saying like, oh, they're wrong, it's like, oh, you have a really valid point. Hence why I'm going to be more intentional talking to people like you, because they make a great point, and we're going to do everything we can to be as adaptable and life-giving as possible. So thank you to all the people that comment. With all that said, thank you for subscribing. Over 80% of people that watch our channel don't subscribe. Chris, I don't know if you subscribe to the show, but if you don't, okay, good. Absolutely. And so I would encourage you to subscribe. Commenting really helps people like see that we exist and gets our videos out to more people. And if you have questions about whole life insurance or want to talk to someone on our team, we have links down below where you can do both. You can schedule a time to talk to someone on our team, or you can go to our And Asset Vault, and we have a bunch of resources that can help break down policy designs, how loans work, how and the benefits of how life insurance is. And we have lots of different resources there. And so you can go check that out. Chris, I appreciate you. I hope you have an amazing rest of your week and look forward to future conversations.
Yeah, great job, Caleb. Appreciate it. Best of luck.
Take care. 80% of people that watch our YouTube videos are not subscribed to the channel. So it would mean the world if you've gotten any value from our show or channel to subscribe and leave a comment and share your biggest takeaway. It helps other people find our channel.